Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Consolidation, that's definitely the name of the game right now. We're seeing Nifty absolutely flat right now. It's up around 8 points as we speak, and it's a very stock-specific market. I hope I'm getting my rates correct as well. Important flash at the bottom of your screen, actually. You should be reading that. Viceroy research report is malicious combination of selective misinformation. That is what Vedanta Group has told CNBC TV18. They've issued this clarification on short seller Viceroy research report, and this is the reply or response that CNBC TV18 has received from Vedanta as well. Remember, the stock fell sharply after that report had come out, and Vedanta has responded to that. They call it baseless in terms of allegations, and they are saying without making any attempt to contact us, this particular report has been issued. It's a report that is coming from a short seller, and they are absolutely denying any information that has been presented in this report.
Absolutely right. Very, very important clarification, timely clarification. Remember, like you can see on your screen, actually the stock took a very sharp beating, but post this very important clarification, they're calling it baseless, and they're also saying that Viceroy Research did not make any attempt to reach out to the Vedanta Group before publishing this particular research. It's on their Twitter handle, and which is where most of the market participants have actually picked up. But Vedanta has given a response and a clarification to CNBC TV18. But we have a lot lined up on the show, so let's start off with the top headlines. Stocks trade ranged as uncertainty over a potential US-India trade deal continues. Consumption stocks and those of utilities manage some gains. IT, metals and realty drag. Midcaps in line.
Union Bank slumps following a weak first quarter business update that has come by. Loan growth comes in at 6.8%, making it the fourth consecutive quarter of single-digit growth. The stock falls 4%.
JP Morgan initiates coverage on electronics manufacturing with an overweight rating on Keynes Technologies, Syrma and Dixon. Says exports could be the next frontier for growth over the long term.
Hindustan Copper under pressure after US President Donald Trump announces tariffs on copper imports that are aligned with existing 50% on steel and aluminium. All right, those are top headlines that we are tracking for you. The Vedanta stock continues to be on our radar. They say that this report has come in ahead of some financial or corporate announcements as well. So they are calling it malicious and baseless as well. The stock has recovered from the lows, so keep that on your radar. We'll keep getting you more information as and when it comes by. For the markets, as I've been saying, it's in the wait and watch mode, and the biggest talking point, of course, is the India-US trade deal. Parikshit is picking up some updates right now. Let's go to him. Parikshit.
Well, we've been speaking to our sources in the government, and they say that a trade deal with the United States is imminent, but the timeline is now unclear. It is now totally up to the US president to accept India's proposal or indicate that the White House and his economic team will seek further talks from India. One also has to keep in mind the scenario that is resulting because of the deadline, the 9 July deadline for reciprocal tariffs to have been extended till the 1st of August. Now, this means there could be more room for talks on the interim trade deal. And sources are not denying that possibility. While, for the moment, keeping the 9 July deadline in mind, we had negotiated and concluded talks from our side, given our proposal, given the best offer we could make to the United States. Now that this reciprocal tariff deadline has been extended, one can expect the US to seek further talks as well. But it all remains to be seen whether tomorrow or day after the US president will explain whether he wants a trade deal with India or wants to have more negotiations. But on the whole, we have been told that the talks between the two sides have largely been positive, barring a few outstanding issues. And we can assume that these would be around agriculture and dairy. How much does Donald Trump wants to push India? How much is India willing to compromise at this stage? That is something we'll have to wait and see. But perhaps in the next 24 to 48 hours, there will be some clarity on whether we will have this trade deal or whether US will say, yes, we are intending and are committed to having a trade deal with India, but at the same time, let there be more talks till the 1st of August.
Thank you so much, Parikshit, for joining us and keeping us up to date with this all-important trade tariff deal that could happen between India as well as the US. But moving on, remember, this is our special segment, Midcap Movers. Hormaz is standing by the wall to take us through all of the midcaps that are moving around in this session. Hormaz, a very stock-specific day today.
Absolutely, as has been the case over the last week or so now when it comes to stock-specific action, even as the markets are in almost snooze mode, if you could call it that. We start off with some of the gainers then, and two auto names stand out in today's session. SML Isuzu is one of them. Force Motors is the other one, both trading with gains of close to 10% each. Both of them are trading at a 52-week high in today's session as well. What are also doing well, Global Health and Sami Hotels. Sami Hotels is a post-listing high for the stock, and Global Health too trading with gains of around 6.5% in today's session. Pharma stocks have stood tall today despite the 200% tariff threat from Donald Trump. Mankind is up 4.5%. Laurus Labs is also at a 52-week high today, as is Natco Pharma, which is doing well for itself. Among the underperformers this year, but doing well for itself in today's session. In some of the newsmakers, of course, Vedanta has been dominating the headlines over the last 60 minutes. The stock has recovered from the lows of the day, though, as has Hindustan Zinc. But Phoenix Mills and GAIL continue to languish at the lowest point of the day on the back of some weak news flow, respectively. Stocks that are doing well on the volumes front today, and LG Equipments is one of them. PCBL, Sterling and Wilson is extending its gains now 7.5% higher, and Rossari Biotech is up 4% on very strong volumes. And lastly, some other stocks that are at a 52-week high in today's session. And look at MRF, now worth $1.5 lakh if you could add at a 52-week high as well. Thyrocare, Sirma SGS, a positive brokerage note, and Gabriel India too continuing to build on to gains, another high for the stock today. Back to you guys.
All right, these are some of the stocks which are on our radar. Thank you so much, Hormuz, for joining us as always. Let's welcome Jay Thakkar from ICICI Securities for a technical check on the markets. Jay, good afternoon. Thank you so much for joining in. What is the next important level on the Nifty that we should be watching out for, and what will you suggest?
Good afternoon to you, Sonal. Congratulations and welcome back. And good afternoon to you, Vivek, as well. Well, Sonal, as far as the Nifty is concerned, it's definitely trading in quite a narrow range, a tight range of, say, 25,600, 700 on the upside to 25,400 on the downside. Now, week on week, we aren't seeing any much of the change. The options data suggests that, till, we are holding out 25,500 levels, Sonal, at least until tomorrow, the probability of upward breakout is quite higher. So, Nifty might inch towards 25,600, 700. That is the upper end of the range until it manages to hold on to 25,500. Failing to do so, it might just fall to the lower end of the range. That is 25,400. So it's just 300 points range, which is just a bit above 1%. If we get a breakout from this range, definitely, a new trend will be established. So beyond 25,700, you can expect 26,000 and beyond levels, or maybe, below 25,400, you can see the retest of 25,000. That's how the index is placed as of now. And as far as stock-specific ideas are concerned, definitely, the FMCG pack has taken some lead in the momentum since past couple of trading sessions. And I've got one buy recommendation from the same, that is on Godrej Consumer Products. I mean, it's trading around the levels of 1294 right now. The idea the strategy should be buy now and buy on dips as well. One can add on dips around the levels of 1280, placing a stop loss at 1250. The average would be somewhere around 1270, 1285 or 1290. One can place a stop loss below 1250, and one can target 1370 to 1400 in this July series. And the second buy recommendation, because Godrej has seen a good long build up now, and second buy recommendation is on Varun Beverages. Here I'm expecting a good short covering. So there's a good trend line breakout, a positive divergence in the momentum. Since the entry of the stock in the F&O or derivative segment, we have seen a good short build-up. Despite the price reversal, the stock is still has not seen much of short covering. So, it's trading another levels of 466. I'm expecting a bounce until 485 to 500 in this series. One can place a stop loss below 450 and go long here as well. So there is a good risk reward on Varun Beverages as well.
Well, thank you so much for joining us, giving us your view on the markets as well as your individual trading calls. But before we slip into a short break, we'd like to remind our viewers to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and for the Global Lens at 8:30 p.m.
Welcome back. It's time to focus on IEX. The stock is surging in trade. The government sources have told CNBC TV18 market coupling reforms is not in itself a big ticket reform for the power sector. Abhimanyu is joining us with all these details. And what does it exactly mean, Abhimanyu?
Now, even as the report on market coupling is submitted by the Grid Controller of India to the CERC is under review, government sources have indicated that market coupling in itself is not that big ticket a reform to be looked at as far as the electricity market is concerned. Government sources pointed out that several recent and upcoming initiatives like electricity futures contracts will contribute to the power sector reforms in India. Now, the multi-commodity exchange is slated to launch its electricity futures contract tomorrow, even as government sources added that it can be looked at that further expansion in energy derivatives market may take place in future as part of power sector reforms which are still being effected by the government. Last month, CNBC TV18 had reported on sources that Power Minister Manohar Lal Khattar may meet stakeholders to apprise them about the benefits of market coupling and also as and when market coupling takes place, it will happen via a broad bid and not through any internal bid. It remains to be seen how early market coupling is going to be undertaken by the union government, since the initiative has been pending since the past few years, even as there have been indications from the government side that it will be implemented soon, but there is no timeline which has been ascribed so far as implementation of market coupling is concerned.
Thank you so much, Abhimanyu, for joining us and giving us that all-important update as far as market coupling is concerned. Well, just to give a little bit of perspective, when we're talking about market coupling, what does it mean? We're actually discussing the spot power market. The spot power market, we have three players in India. The dominant player, of course, IEX, over 85% market share, also known as the day-ahead market. What actually happens over here is that there is price discovery on these exchanges, and if market coupling is implemented, price discovery will move to a third party. In most likelihood, it will be done at Grid India basis. Now, this particular process, as Abhimanyu pointed out, has been going on for quite some time. The latest development was that Grid India had been given the mandate to go ahead and do a test pilot study, post which they submitted the report to CERC. Now, the CERC report indicates that there may not be too many advantages as far as market coupling is concerned, which is why market is currently reacting the way it is. What is the next step? CERC itself will go through all of the proposals of Grid India, post which there will be a consultation paper. There will be recommendations taken from all of the stakeholders as far as the spot power market is concerned, and post that, CERC will take the final decision. So it's definitely some time away, but this is an important development that Abhimanyu has just pointed out.
Oh, yes, and it's been ongoing for such a long time. So let's see which way things go for this one. Thank you, Vivek, for explaining that to us in detail. That's about IEX, but delivery is also in focus. There's an initiating coverage that has come by. Mangalam is here to tell us more. Mangalam.
Well, for delivery, it's one of those stocks which has the street always divided, some on the sell side, some on the buy side. Now we have an initiating coverage coming in from Motilal Oswal. They've initiated coverage of the buy rating. They have a target price of 480 rupees on the stock. They say it's India's largest third-party logistics provider, which serves nearly 19,000 pin codes with offerings across express parcels. There's less than part truckload, full truckload, and supply chain as well. They command over 20% express logistics market share. And, Motilal's own estimates account for nearly 14% revenue CAGR over the next 3 years. And they believe the operational performance could be a lot better, with EBITDA growing at 36% and on a favorable base, the net profit growing over 52% as well. So if you look at these numbers, plug that in and look at the Motilal Oswal target price, then it is implied at a valuation of 36 times FY28 EV to EBITDA. So that's what they're justifying as the good growth opportunity here. Just remember, the bear case for delivery, however, is the fact that one of its largest clients, Meesho, has been looking at insourcing their own logistics, so they stand to lose market share out there. And the second part is that at every higher level, because of the high institutional interest in the stock, there is always that liquidity overhang that continues, with some of the other looking at a block deal on delivery. So that's what divides the street. But the fact that it's one of the largest delivery players in the country is undebatable, and as a result of which, some on the positive side.
Thank you so much, Mangalam, for joining us and telling us about delivery and what Motilal makes of it. That stock doing quite well in the session today. But before we slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. You're still tuned into Midcap Radar. Well, let's talk about some more operational updates. Prestige Estates came out with its Q1 update just a while back, and it is an all-time high sales number that we've seen for the company this time. Sales are up 300% to come at 12,126 crore rupees. Their sales volumes are up 234% to come at 9.55 million square feet. They've done in a quarter what most companies do in a year, actually. Collections are up 55% at 4,523 crore rupees. The special part about this quarter is that geographic mix has changed. You remember, Prestige is primarily a Bengaluru player, but this time around 59% of their sales have come from the National Capital Region at 59%, Bengaluru just at 21%, Mumbai is 12% and Hyderabad at 5%. Majority of their launches as well, 14.94 million square feet, majority of that is coming from the NCR region this time around. 5.45 million square feet of projects are completed in Q1. So it's a stellar number that Prestige has reported this time in Q1. In terms of their office business, the leasing has come in at 1.21 million square feet and occupancies have come in at 93.7%, which is steady on a quarter-on-quarter basis. For their retail business, occupancies are strong. They have come in at 98.9%. So overall, it is looking like a good set when it comes to the Q1 operational update. And looks like the expansion plans that they have beyond Bengaluru are coming to fruition, because a lot of sales, almost 60%, have come in from the NCR region this time around. So Prestige is in focus on the back of that. Let's talk about other set of realty names. Godrej Properties, Phoenix Mills, both of them are in focus. Nomura has initiated coverage on both these stocks. Both of them are under pressure. Now they have initiated with a reduce on Godrej Properties. The target is at 1,900 rupees a share. They are worried about their pre-sales momentum. It is weaker than what the street was working with. Valuations are looking stretched on the stock as well. They expect FY26 pre-sales to come in at 31,000 crore rupees versus the guidance of 32,500. They are looking at volume-driven strategy, the company that is, but that is not working so well for the company. They expect execution challenges to come by, and this is visible given the deliveries which are delayed by the company as well. For Phoenix as well, it is an initiation on a reduced rating. The target is at 1,400 rupees a share. They see slow consumption across mature malls. So whatever consumption growth is coming in, it is coming in from the new malls that the company has come up with. They expect ramp up to come by only in FY28. Valuations again for this stock also seem stretched. So that is what they don't like right now. So far, it has seen a 40% CAGR in terms of retail consumption over the last 3 financial years. They expect it to reduce to 9% in FY27 and 11% in FY30. So high double digits to low single digits or high single digits is what they are expecting now. And that is the reason they have a reduced rating on the stock.
Both the stocks reacting today. Godrej Properties down 2%, Phoenix Mills down over 3%. But moving on, the EMS space continues to remain a hot one. JP Morgan today has initiated coverage on quite a few stocks within the EMS basket. Upasana joins in with more details.
Well, EMS sector continues to remain in focus today as JP Morgan has initiated coverage and recognized this sector as the sunrise sector with a strong revenue CAGR of nearly about 32% for the next 5 years. It says that this growth will be mainly led by rising electronics content in products, Make in India push, and even realignment of global supply chains to India, with China Plus One strategy playing out. Now, they have recognized 2 emerging opportunities in this sector, that is OSAT and PCB, while exports could be the next growth frontier, is what they have said. Now, in terms of companies, they've given an overweight rating on Syrma, Dixon Tech, and Keynes Technologies, and it targets 800 price target for Syrma, 17,700 for Dixon Technologies, and 7,115 for Keynes. While on Amber and Sign DLM, it has given a neutral rating and underweight on Avalon Tech. The target price for Amber, the JP Morgan has given, is around 7,350 for Sign DLM, 450, and 650 for Avalon Tech. Now, in terms of key growth triggers of the top 3 companies on which the brokerage is overweight on, firstly, coming to Syrma, it expects the exports to make a comeback from FY27, due to which it expects a growth acceleration and margin expansion going forward. For Dixon, it believes that it will be mainly a mobile, which is the key segment of the company, mobile-led growth until FY27, and after FY27, the company's non-mobile segment will pick up. Keynes, it expects the fastest 46% revenue CAGR of over FY25 to FY28, with a target of nearly $1 billion of revenue by FY28. And overall, for Syrma, Sign, DLM and Avalon, it believes that the export could be the next growth frontier over the long term. And overall, it expects a 3 times 3-year rally and demanding valuations in the sector, which is leading to an earning upcycle, is what the brokerage has said. So overall, it remains positive and bullish on EMS sector, hence it remains in focus today.
Okay, makes sense. Thank you so much for joining us with all those details, Upasna. For the markets, very stock specific right now. So something like a Metropolis Health should come up for you on the screen. Reported its Q1 update on Monday or over the weekend actually. That stock is picked up 5.5% right now. VIP is up 4.5%. There's Wockhardt 4%. Some of these pharma names or the healthcare space names are surging in trade. There's Natco Pharma 4% higher. We do have the chemical stocks doing well as well. So something like a Coromandel International. There is Rosari Biotech, PCBL, all these stocks are surging in trade. So the pharma and chemical space continues to be in focus. The expectation is chemicals could see some recovery in Q1.
Pharma, remember, yesterday it was a weekday. There was a Macquarie downgrade note on quite a few of those names, and there was a multiple cut across the sector. Today morning, we actually came in with some negative news as far as pharma is concerned, with Donald Trump saying tariffs could be as high as 200%. But despite most of those concerns, the entire sector today has recovered quite sharply. A couple of stocks that are actually trading quite weak. The number one is actually GAIL. So GAIL is almost 4% lower. Now, remember, our colleague Sudarshan did tell us in the morning that there could be tariffs in the range of close to rupees 70 per MMBTU. And despite that, the street doesn't like the fact that there could be a delay. Now, the back of that, GAIL down almost 4%. Some of the other oil and gas names, too, names like BPCL2, now trading near the day's lowest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.